Thank you. Good evening, everyone, and welcome to the latest in our series of leadership masterclasses sponsored by Rathbones. My name is Kirsty Maxey, and I'm the chair of the IoD City Financial Services Interest Group and CEO of Team Spirit. Tonight, we're very excited to hear from the CEO of TheCityUK, Miles Celic. But before we meet him, there are just a few bits of housekeeping. Firstly, here's the agenda for this evening, and there are two ways you can interact with everyone tonight, and both of them are at the bottom of your screen. Firstly, you will see a chat button. Do use this to let us know where you're dialing in from and share your details with other attendees. There will also be a special LinkedIn post in the chat box, and all you need to do is comment, and then you can connect with all the other attendees. Secondly, there's a Q&A button at the bottom. So if you've got any questions you'd like to ask Miles this evening, they will be taken from that Q&A section. The great thing about the Q&A is that you can upvote questions that you really want to see answered. So please make sure you click on the ones you want answered. And finally, just to let you know that this webinar is being recorded. This event is part of the IoD Business Extra webinar series, which is providing insight and networking opportunities for our members across this very challenging time. Now I'd like to introduce you to our sponsor of the Leadership Masterclass series, the Managing Director of Rathbones, Rupert Barron. Rathbones are the wealth management service for entrepreneurs, private clients and professional partners. Welcome, Rupert, and over to you.
Kirsty, thank you very much for the introduction, and I'm delighted that Rathbones is sponsoring this Institute of Directors speaker series. Our thanks to Alastair King and his team, who have worked so hard to secure such great panelists. And tonight we have Miles Celic, Chief Executive of TheCityUK, the body representing and leading UK-based financial and professional services. Alastair, I understand you'll be in conversation with Miles on how he has led TheCityUK during these extraordinary times. Mark Twain is credited with saying, "It is never wrong to do the right thing." And if you'll indulge me, I just wanted to share how I think Rathbones seeks to lead, pandemic or no. Leadership takes many forms, and no one approach works for all situations. From early in our existence, Rathbones and her directors have tried to lead morally and lead professionally. Some of you will have heard my colleagues in previous sessions speak about Rathbones being at the centre of the abolitionist movement or the suffragette movement. Today, we've played an active role in drafting recent modern slavery legislation for the UK and Australian governments. Over the 280 years of our existence, our business has changed beyond all recognition, yet we find ourselves today at the vanguard of the private client wealth management industry in trying to do the right thing. To Rathbones, leadership is about service. Service to clients, service to our staff and their families, service to the wider community, service to all our stakeholders. In an era of individualism and self-interest, we see it as our professional duty to lead by example, but simply to do the right thing. We believe in thinking, acting and investing responsibly. On behalf of Rathbones, enjoy the rest of the evening And Alastair, over to you.
Rupert, thank you very much indeed. What a great pleasure it is to be with you all tonight. Thank you very much indeed for joining us this evening. This is the latest in my series of leadership masterclass interviews for the IoD, kindly sponsored by Rathbones. Today, I'm absolutely delighted to welcome a good friend of the IoD by the name of Miles Celic, who's the CEO of TheCityUK. Miles, can you hear us? It's lovely to see you here.
Great to be here. Thanks very much for asking me to join you this evening.
Great news. Now, Miles, I always think in these situations, it's always better for the guest to introduce themselves rather than for the interviewer to do so. So could you say a little bit about yourself, your background, a little bit about your history, and also how you got to be where you are today?
Sure, very happy to, Alastair. So I actually started out in broadcasting. So when I left university in the mid-90s, through a series of accidents, I ended up in what was probably the UK's first ever reality TV show. So I appeared on something called the People's Parliament, which was a Channel 4 programme where they created a citizens' jury. I don't know if you're familiar with the concept of the citizens' jury, but they took the old First Amongst Equals set, House of Commons set that was in the Granada TV studios in Manchester, and they put 100 ordinary members of the public in there to debate the issues of the day. And I sort of did this after the end of university, really enjoyed it. And at the end of the programme, I was offered a trainee contract with the production company. And by the age of 22, I found myself slightly bizarrely sort of presenting a slot on Radio 5, looking at current affairs and news. Now, I should qualify quite how impressive a feat that was, because the show I was on was something called The Other Side of Midnight, which gives you a sense of quite how prime time it was. But we were the first of the BBC's sort of broadcasts from outside London. So I wouldn't pretend that I was getting vast amounts of fan mail. I'm told that when I moved on after a couple of years, my core audience of 2 security guards and their dog missed me. But after that, I wasn't expecting a great deal more. So I then moved on to work in Parliament, where I concentrated on foreign affairs and defence issues, and from there into consultancy, and spent some time working. I was one of the early employees at Finsbury. Spent some time with Omnicom, the world's leading corporate communications and public policy consultancy. And from there, spent a lot of time working in financial services, advising clients such as JP Morgan and others. And then I thought I fancied going in-house. I'd really enjoyed advising people on their public policy challenges, and I thought I actually quite fancied doing that directly. So I joined HSBC in 2007, thinking, well, financial services appears to be making terrific progress. There couldn't be any difficulties coming. And then, of course, found myself as part of the team at HSBC that was dealing with the financial crisis, and that was a fantastic time in the sort of original sense of the word. Absolutely incredible events. And to have a sort of ringside seat at the formation of such a historical point in the economy was a fascinating time. So from there, I went to Prudential and was part of the group leadership team there, and headed up public affairs and policy, and joined TheCityUK 4.5 years ago. And when I was first approached to join the TheCityUK, to take this role at the TheCityUK, it was a time when the UK was expected to vote to remain in the European Union. Hillary Clinton was expected to be elected President of the United States, and there was considered to be no chance of Leicester City Football Club winning the Premier League. So it gives you a sense of quite the unexpected circumstances I walked into. But I've been very fortunate. It's been a fascinating career, and I've worked on a range of fascinating issues with some remarkable people.
Lovely. And the role you have now, I think, it sounds absolutely fascinating. And but perhaps you could tell those in the audience who maybe haven't come across it as much, just a little bit about it. What are its goals? What are its remit? What's its remit? Why did it come about?
Sure. So TheCityUK is actually a relatively new body. So we were set up just over 10 years ago as a result of the global financial crisis. So in the way that government often does. Alastair Darling, as Chancellor of the Exchequer, felt that there needed to be a body that represented the entirety of the UK-based financial and related professional services ecosystem, so 10% of UK GDP, 2.3 million jobs, that is in everything from banking, asset management, insurance, market infrastructure, but also legal services, accountancy, management consultancy, this sort of unique agglomeration, this ecosystem that doesn't exist in quite the same way anywhere else in the world. And also recognizing that for all the fantastic work that's done by the City of London Corporation for the Square Mile, but this is also a national industry. 2/3 of the jobs and half of the exports of our industry come from outside the M25. So Alastair felt that there needed to be a horizontal body that sat complementing the work that happened in the verticals done by things such as what was the British Bankers Association. And interestingly enough, and in the way that government often is, at the same time that Alastair Darling came up with this concept, Boris Johnson, as Mayor of London, came up with exactly the same idea. And neither side was aware, as I understand it, of each other's existence until they were both up and running. And then they came together, and under the auspices of work led by Sir Win Bischoff and Bob Wigley, the TheCityUK was created. And our job is to represent that ecosystem. This is a national strategic asset. We have the world's most successful exporter of financial services, the world's most successful cluster of financial and related professional services expertise. And especially as the UK now moves into the post-Brexit, post-COVID future, this will be one of the cornerstones, one of the foundations of our national prosperity. The City UK's job is to work alongside many others to promote trust and reputation in the industry, but to promote particularly policy outcomes that are beneficial to the UK and to our customers.
It always amuses me sometimes, Miles, that the City UK is described as the trade union for financial and professional services, and so it's good to be speaking with the General Secretary of that trade union. I think it'd be great to hear your views on the current mood of the financial and professional services sector as you see it at the moment. I mean, I'm thinking particularly, are they feeling optimistic? Are they feel pessimistic? And I think particularly, what about the return to people's desks? What are the people saying about that?
I think it's a great question, and there's no doubt that the industry has gone through some real swings of the pendulum over the last 10, 11 years. And Brexit was clearly a shock to the system. It was an unexpected vote in many ways. But one thing that I think the industry has done very well, and here I also want to pay tribute to the work of the regulators and government, is to prepare for the outcome that we ended up with. So I think as the Prime Minister and the Chancellor themselves said, we probably didn't get to where we would have liked to have been on financial services. It's quite clear that not just financial and professional services, but the services economy generally was not prioritised during the talks on either side of the Channel, or indeed the Irish Sea. Services is 80% of the UK economy and 70% of the EU economy, and that did not come through in the talks. However, where we've got to is that because of the preparations that were put in place, because of the focus and the hard work by industry and the authorities, we left the transition period at the end of the 31st of December, and there has been no major disruption. Companies have made the moves they needed to make. They've made the preparations and the dispositions they needed to make, and from the point of view of customers, it has been, for the vast majority of them, completely seamless. So they've not noticed any difference in the way that they operate. And in terms, therefore, of the Brexit dimension of this, the question then becomes, how do we determine the future nature of the relationship between the UK and the EU? There's a memorandum of understanding on regulatory cooperation that's being negotiated at the moment. The UK has unilaterally provided for regulatory equivalence in a range of areas, and that's something we very much welcome and the right approach to make. We're still waiting for the EU to follow suit on that, and we shall see whether or not that happens. They're certainly taking far longer than the UK is taking, and that has become on the EU side a politicised process. Our view is that the sooner that certainty can be provided, the better from everybody's perspective. But I think the fascinating thing and the very welcome thing has been the energy that the Chancellor and his colleagues at Treasury have put behind looking at where the focus needs to be as we evolve the industry into the future. So we've seen reviews on listings, we've seen reviews on fintech, we've seen reviews on the financial regulatory architecture. All of this is very welcome. We would particularly welcome an opportunity to hear an overarching vision from the Chancellor or the Prime Minister about what they would like to see with this industry, and we hope that will come with time. In terms of COVID, that was another further unexpected shock to the system. I have to say that pandemic planning is something that any well-run company will have done. I was part of the pandemic planning teams at both HSBC and Prudential. But when it finally hit, what I was very proud of was the way that the industry stepped up. So if you look at the amount of lending that has gone from the banks into companies backed by the government loan schemes, and especially into SMEs, we really stepped up at very short notice to provide that. We do need to make sure that we've not created an unsustainable debt overhang for many, particularly smaller companies. But we have played our part in keeping the industry in keeping the economy in suspended animation whilst the public health crisis passed. What the changes that have been wrought, I think, by COVID and indeed by Brexit really amount to, though, is a strategic accelerator, a catalyst for change. So the things that we're seeing now, for instance, on return to the office, those working patterns aren't completely radically new. They are a development of what we've seen over the last 5-10 years. It's accelerated it. And in terms of where the mood of the industry is, I'd say that broadly speaking, it's positive. We feel that we've played our part in the crisis. We feel we've got through Brexit and the worst of the disruption that may have happened there that we managed to avoid. And now it's about how we make sure that as employees return, that they return to a safe working environment, but also recognizing that for many employees, it will now be far easier or more convenient to work from home for at least part of their working week. And I just wrap up on this by saying there are those who seem to think that everything will snap back exactly to how it was in February 2020. And there are those who seem to think that nothing will ever be the same again, and we are on our way to living in some version of the Keanu Reeves movie, The Matrix. The reality is it's almost certainly going to be some kind of hybrid with people working from home, say 2-3 days a week, from the office the rest of the time. And that raises interesting challenges in terms of how you use the office, also raises challenges in terms of city centres. But overall, I'm optimistic about the direction we're heading in.
We're going to come back to city centres and a few of the things you've mentioned in that piece. But perhaps, Miles, I could just really ask you a sort of direct question. That is, can the UK preserve its preeminent role in Europe and the world in relation to the sector, and London in particular? I mean, or is that just is that fanciful?
No, I don't think it's fanciful at all. So I'm by nature an optimist, but I'm an optimist who grounds his optimism in reality. And if you look at where the UK is, if you look at where London is, we have a number of natural advantages. We have the English language. We've got the highest concentration of high-skilled jobs anywhere in the world, and that's not just sort of flag waving on my part. That's based on a Deloitte analysis that was done 4 years ago. London has 1.7 million high-skilled jobs. The next biggest centre is New York with 1.2 million. We've got fantastic international transport infrastructure, which we need to keep enhanced. We've got terrific regulators, amongst the world's best regulators here. And we have mass, we have the critical mass, the markets are here. What that, of course, means is that we can't be complacent. And I always make the point that history is littered with examples of cities that were the preeminent international financial centre of their time. You can think of Florence, you can think of Vienna, you can think of Venice. These are all centres that fell by the wayside because they got the politics wrong, they got the regulation wrong. So our destiny, to a large degree, not entirely, but to a large degree, is in our own hands. We need to make sure we continue to attract talented people. We need to make sure that we continue to attract people into the industry from within the UK who might not necessarily have thought this was the industry for them. We need to compete with the way that we didn't need to 10 years ago. The sort of skills that the industry is going to be more and more dependent upon. And we need to make sure that we are able to create a nimble, flexible, tailored regulatory regime that reflects the opportunities of the future, such as sustainable finance and fintech. So if we can do all of that, if we can maintain that ability to be maneuverable and fast, then we can find our way to maintaining our competitiveness, maintaining our attractiveness, and to continue to play the role that we do as the international financial centre for this time zone. So there is a sort of baton passing that happens from Asia to London to New York. We've got to build on that opportunity, and I'm confident that we can.
I'm sure that you've been involved in advising government in relation to the negotiations that with the European Union, and what's your reflection of the current state of those negotiations? I think that there are obviously our members talk about the concern about the 30 days. They can give us 30 days notice, and all things, everything can sort of come to an end, and all these sorts of things, and the sort of precariousness of our current situation. But I just wonder, what's your take on the negotiations at the moment?
So we do a lot of engagement in the European Union with the officials in Brussels, with member states. We do that alongside, so I did a number of meetings last year alongside Catherine McGuinness, the policy chair at the City of London Corporation. We work very closely with the City of London Corporation's Brussels office, as well as with other counterparts. And so there's been a huge degree of engagement by industry and industry bodies in Brussels. So where I'd say things are is that we have these negotiations around a memorandum of understanding on financial services regulation. I think it's important that we manage expectations on that. This is not going to be some radical new method or mechanism for joint decision making. It is a mechanism, a structure, an architecture for sharing information. We think that's welcome. But we've made clear throughout this process that that is not sufficient. It needs to be built on a relationship of trust between both sides. And the risk is that we have a scratchy, ill-tempered start to the Brexit, sort of post-Brexit relationship. And we've seen that in some of the exchanges between the UK and the EU, for instance, on the vaccines programme. So our argument is always, firstly, the financial services industry in Europe is a closely integrated, intertwined ecosystem that doesn't just involve the EU and the UK, it also involves, for instance, the Swiss industry. And in fact, if you look at the top 10, according to the most reputable surveys here, the top 10 financial centres in Europe, half are outside the European Union: London, Edinburgh, Geneva, Zurich, and the Channel Islands. So this is a closely intertwined ecosystem, as I say. So I think there is a recognition on both sides that over the long term, there are a number of shared challenges. I talked about sustainability and climate finance earlier, where we can work more closely together. And the opportunities are there. And what we need to get through are, if you like, the sort of immediate dust settling process post the departure. The MOU will be an indication of that. We need to see what happens with the equivalence decisions on the EU side. But I think we also need to recognise that the EU is going through a changing process and a changing set of circumstances at its end, and it is prioritising a market location policy over a market efficiency policy. I would argue that that is not in the best interest of customers over the long term, but that's ultimately going to be their decision. I see in the chat that I may have forgotten to mention Zurich. Zurich is one of the top five non-EU centres in the European top 10. So it's London, Edinburgh, Zurich, Geneva, and the Channel Islands, the non-EU members of the top 10.
Lovely. Thank you. It'd be interesting to know Miles, you must know some of the people who are actually at the coalface on the negotiations. You speak with them. You certainly speak with Treasury. What's their mood in relation to progress at the moment? I mean, are they upbeat? Or is this sort of downcast? Or how are they feeling?
I think people are realistic. I think people are realistic. This was always going to be an enormously complex process. I think people have been realistic, as I mentioned earlier, that much of the focus in the media and elsewhere has been on the goods dimension of these talks. And that people are realistic that over the long term, as I said, it is in the interests of the UK to see a successful EU, and in the EU, people are very realistic when we speak to them that they expect that London will be Europe's international financial centre for years to come. Now, over the long term, absolutely, there are ambitions in the EU to match their weight, their economic weight in terms of their financial services clout. There was a speech which I think is a good indicator of where some EU thinking is, that Bruno Le Maire, the French finance minister, gave in Helsinki in September 2019 at the Eurofee conference, where he talked about the need to build sovereign European capability in financial services. And inevitably, there will be times when that more market location policy approach is likely to run into issues with the approach the UK is going to take. And from what I can tell, very reassuringly, the UK approach will be to be competitive, to be open, to be as attractive as possible for international investors and international firms, but to do so through taking a traditional small L liberal free market approach. Now, that's not what is, in my view, erroneously and unhelpfully called Singapore on Thames. You know, I've worked with companies that do a great amount of business in Singapore, and Singapore is not a low regulation, low quality centre. Singapore is successful precisely because it's the opposite. It's a very high standard centre, but it is nimble. It is flexible. It can evolve quickly. And I think that the approach, therefore, on the UK side, as I said, needs to prioritise how we ensure that we can have a regulatory regime in place that suits a market of 68 million people with a very successful international financial services and professional services industry as a part of that economy.
And what's your guess as to the timeline, though, Miles? Are we talking years and years, or do you think something can be established fairly promptly?
So I'd expect the MOU talks, and the ambition on the MOU talks was for them to be wrapped up by the end of this month. I'm hopeful that can remain the case, that the talks certainly seem to be ongoing. And then it's I think on the equivalence determinations, I genuinely don't know. We would like to see some progress on those much sooner rather than later, but that is ultimately out of the UK's hands. In terms of the way that the relationship with the EU will develop, I wouldn't put a time frame on it, because I think it's going to be a bit like painting the fourth bridge. The Swiss have this constant ongoing set of negotiations going on with the EU. The EU privately will tell you, whenever you speak to anybody in the EU decision-making process, they'll say, how time intensive, often how frustrating that process can be. But that is reflective of the fact that you are constantly renegotiating and fine-tuning the relationship between Switzerland and the EU. And as it currently stands, that would appear to be, at least in financial services terms, the direction that we're heading in ourselves. That's not necessarily a bad thing. I think it's better sometimes to have a bespoke model than a sort of one-size-fits-all model. But it does speak to the fact that we're going to continually engage. And as I say, if we remain Europe's international financial centre, I think that creates a demand, and in my view, a positive demand to keep engaged between the UK and the EU.
I'm very interested to hear what you say about Singapore, Miles, because I utterly agree with you that there is this sort of misconception that it is a low regulation economy. But some of our members with whom I speak who are in the financial services sector, they are concerned that will we destroy our reputation, this golden reputation we have for high regulatory standards, in order to go ahead and try and sort of cut ourselves an advantage with the European Union, almost sort of be the beneficiary of people doing some forum shopping and all the rest of it because of regulatory arbitrage. And I think that I wondered, is that a sort of premise that we're even contemplating on negotiating, or will we keep our own separate standards, but entirely very high standards?
I think that over time, we will inevitably diverge from the EU, and the EU will inevitably over time diverge from the UK. The question is, what's the nature of that divergence and how fundamental is that divergence? The EU's regulation tends to prioritise the same sorts of things as the UK's regulation, and vice versa. In fact, the EU regulation was largely written by the UK. Jonathan Hill makes the point that it's in the nature of the way that the EU operates that a large member state informally tends to take the lead on a key economic dossier. And in financial services, it was the UK. UK government, UK regulators, UK industry put a huge amount of effort into helping shape, to work with our European partners to shape regulation in the EU. So the body of regulation that we've onshored in the UK is something that we are very, very familiar with, very comfortable with. From I think the point of view of the point that you're making, though, what I don't expect and what I've seen no indication of is that there is any appetite in the UK for some radical bonfire of regulation. There is a recognition whenever we speak to government, when we speak to opposition, when we speak to regulators, that the UK is a high standards centre and that its success over the long term is built on being a high standard. And a foreign investor put it very well to me. He said, I want to be in a well-regulated, high standards London, because that's a kite mark. It's a symbol of quality. If I can do business in London, I can do business anywhere. You know, it is a sign of the quality and the standards to which I operate. You might get a sort of steroid shot of a sort of an initial burst if you were to cut regulation radically. But it's rather like that sort of performance enhancing drug. It has a serious long-term cost. And as I say, I don't see anybody who's pushing for that. Where there will be change will be as the industry evolves. So as fintech evolves, as green finance evolves, as new market entrants come in, as we look at the consequences and needs of an aging population, infrastructure renewal, those are different in the UK in many ways than they will be in the EU. If you look at data, we have a different historical experience when it comes to the state and data and the private sector and data than they do in the EU. And so naturally, the UK will develop in one particular way and the EU will develop in another. I'll just characterize that. I'll illustrate it by a conversation, just relating a conversation quickly that we had while the negotiations were going on over the Article 50 process. We went in to go and see a senior EU official, and we ran through a number of problems that we'd identified in the British industry and a number of solutions to those problems. And our European counterpart listened politely, and at the end of it he said, you know, this is the thing about you Brits. You identify practical problems and you come in with pragmatic practical solutions. It's your classic empiricist approach. And later on, he said, you'll fit some completely unconvincing theoretical framework around it. He said, in Europe, we do it the other way around. We start with a theory. It's Code Napoleon. Yours is the empiricist common law approach. Ours is the Code Napoleon approach. We start with the theory and we measure everything against it. I'm not necessarily saying one is better than the other, but it is reflective, I think, of the philosophical underpinnings of the approaches that will be taken.
Just a reminder to our audience that you're listening and watching the Leadership Masterclass for the IoD with me, Alastair King. This evening, I'm interviewing Miles Celic. He's the CEO of TheCityUK. This event is kindly sponsored by Rathbones. Miles, just on a practical level, how can members or people who are watching, how can they prepare for some of the outcomes that you've talked about? What sort of practical steps could they take to make sure that they're on the right side of things?
So firstly, in terms of the Brexit departure, I'd say that the regulators did a fantastic job, and I really do applaud them in terms of getting in touch with companies to make sure that they were well positioned. I think the question now is how we make the best of the opportunities that the UK now has to build and to seize as we move ahead. There is information available on the HMT, the HM Treasury website, on the BEIS website, as we start to develop, and I think there's some really exciting ambition here from the Department for International Trade, from DIT. As we start to develop what will, I hope, be a series of best-in-class free trade agreements or digital agreements or financial services arrangements between the UK and non-EU countries. I think your members ought to be looking at the DIT website, the UK export finance relationships that exist. DIT have a fantastic set of representative offices across the country, because as the Minister for Trade, Lord Grimston, formerly the chair of Standard Life Aberdeen, and in fact formerly chair of TheCityUK, and also comments that Liz Truss, the Secretary of State for Trade Minister for International Trade, has made. Governments negotiate FTAs not for their own benefit. You know, you don't get a direct benefit from an FTA if you are a government. And what government needs is for businesses to seize the opportunities that are created, for instance, under the UK-Japan CEPA agreement, which has some really exciting proposals on digital trade and financial services. So an FTA is the start of a journey there. It opens a regulatory dialogue, but rather, like for those on this call who might be a little bit older, who might remember the creation of the single market and the 1992 campaign that the UK government ran at the time. These free trade agreements are useless unless businesses seize the opportunities that they create. And that's something that I have to say that DIT in particular have done some fantastic work on. I know BEIS and HMT are doing the same in terms of working with businesses to explore and support with them how we can make the best of these new FTAs that are being put in place. And it's not just FTAs, as I say, it's looking at the opportunities that exist at the sort of sub-FTA level or alongside FTAs in terms of economic and financial dialogues and cooperation agreements that are being pursued with markets such as India. So I really would recommend that IoD members engage with the DIT mechanisms, and those details are up on the respective government websites.
And that meshes well with my next question, Miles, which is about the reports that we've seen in the news the last a couple of months or so, Khalifa and Hill, on various elements of the financial services industry. Could I ask, how well have they been received among your members? And also, are there other reports that are required? You know, is there anything out there in the ether that we that is about to come out that may be of interest to some of our members?
So I think what has not necessarily received all the coverage that it deserves is that we are going through a really quite substantial period of examination, of reviews, of consultation of the way that financial services in this country operates and where the opportunities might be. So there are consultations, as you've identified, that have been conducted on the listings review that is now moving into the FCA, examining that. The Khalifa review on fintech, there is a review, a consultation going on the future regulatory architecture, recognizing that with the UK out of the EU and the classical mechanisms that we had for 30, 40 years in terms of how regulation ran in the UK, that it is now time to build our own regulatory architecture and how that operates and how consultations are run, how regulation is generated and how it's held accountable and the regulators are held accountable. So there's that. There's the work on carbon markets. There's work going on capital markets. There's a huge range of activity going on. There's some fascinating and I think very exciting work going on long-term asset finance. So looking at how we unlock productive finance for companies that have perhaps not had that in the way that they could have done really over the last decade. Sometimes it is an area that other countries do better than we do. So a huge range of consultations going on. I think, as I mentioned earlier, that needs to be overlaid with a vision for what it is that we want for this industry as a a regulator in Southeast Asia put it to me, what's your elevator pitch? What is the elevator pitch from UK government for financial services? Now, I have a reasonably good idea of what that is, as I've talked about earlier. Is about high standards. It is about openness to international investment, attractiveness. It's about attracting the best people in the world. And it's also about playing a very active role in setting international regulatory standards. One international, well-known international figure put it to me. He said, look, the international regulatory framework is going to be set by the US, China, the EU, India, and the only other player in that space, either in that group of four or the only country just outside, just below that group of four, is the UK. And the UK is going to be the swing voter in this. So we need to make sure in the integrated review that the government released last week that looked at British foreign policy and security policy, I thought was extremely welcome because of the number of times it looked at financial services as part of the UK's unique offering to the rest of the world, and part of being the industry being part of a national strategic asset for the UK. So back to what I was saying earlier, I'm optimistic. I think we're looking at things in the right way. We're examining what we can do better. This industry is going through enormous amounts of change. As I said, that's been accelerated by the Brexit and COVID processes. We are amongst the world leaders in fintech. We're amongst the world leaders in green finance. It's those areas that are really going to mark out where the UK is going to be successful in the decades ahead.
Just before we go on to Q&A, Miles, a question I'm starting to ask all of my interviewees, and that is, in 1979 saw the release of an extraordinary track called Reasons to be Cheerful Part 3 by Ian Jury and the Blockheads. And it was a miserable time in 1979. And so what Ian Jury did was he wrote a track where the lyrics were just a whole series of lists of things that made him happy. And I just wonder, what are things out there that are giving you sort of cheer that people aren't really seeing, certainly in relation to your professional life? Why are you optimistic? And that may be hopefully a reason that other people don't see.
Well, the first thing I'd say is just to put that in context, and this isn't a party political point, but 1979 also marked a turning point in the UK's fortunes. If you'd said to somebody in 1979 that by the middle of the 1980s, the UK would be enjoying some of the fastest growth in the developed world, and that by the end of that period, tens of millions of people would have been liberated behind the Iron Curtain, nobody would have believed you. So I think it's always important to look at these things in broader contexts. In terms of where I'm optimistic, I think the UK has a number of natural advantages which I ran through earlier. We have here in this country decades, if not centuries, of experience of having a major international financial centre. And that is important because it's an organic process. And I use the term ecosystem about our financial and professional services industry deliberately because it grows over time. And it's very difficult to replicate that by state-imposed diktat in another place. So I always make the point that if you could create international financial centres by state intervention, Pyongyang and Havana would be two of the leading international financial centres in the world, and clearly that's not the case. I think if you look at the way that the UK is growing its technological expertise, the growth in R&D investment, the attractiveness that we continue to have to talented people from around the world, particularly in tech, the strength of our creative industries, the fact that we remain one of the world's leading advanced manufacturers, I am optimistic, and the role of our industry is to act as an enabler for growth across the rest of the UK. And the final point I'd point to as a reason for optimism is that we've had false dawns for decades about the levelling up agenda in this country. On this occasion, it feels different, and I think that is a huge advantage for London, and I think it's a huge advantage for the rest of the UK.
Lovely, thank you, Miles. We're going to go to Q&A, and thank you very much indeed to the audience for putting in some really excellent questions. So Miles, given that we've got a fair few to try and get through, if you could keep your answers fairly concise, I'd be grateful for that. First, we're going to kick off with one from Barbara. Barbara is, I wonder if Miles could give some ideas on how, in present circumstances, young people with good qualifications can be encouraged and helped into the jobs market in financial and professional services.
So great question, Barbara. Thank you for that. So about 2 years ago, we ran something on behalf of Treasury working with the City of London Corporation and EY called the Financial Services Skills Task Force. And that was exactly about making sure that we continue to attract people into the industry, that those aren't just people who are coming from the usual graduate roles, and that we are much better at recognizing diversity and inclusion in the industry, and also that we're better at retraining people as technology becomes more important. And to keep this answer brief, what I would do is I'd refer you to the website of the Financial Services Skills Commission, which is a body that was set up as one of the recommendations of the Financial Services Skills Task Force, that goes into this in great depth. But in summary, I'd say that that's something that we are in the industry extremely alive to, very, very focused on, and recognizing especially that if the future of the industry is about being more nimble, being more technologically enabled, much more comfortable with sort of innovation, and recognizing where the geographical and thematic opportunities for the industry are. So Asia, the United States, geographically amongst others, and thematically, as I've talked about, sustainable finance and fintech, that's going to require a different kind of workforce and a different sort of number of skill sets. And the FSSC website is a great place to start with that.
Lovely, thank you. Something we've touched on earlier, but a question from Hamish. Given that the EU does not seem to be overly bothered about granting equivalence, should the UK start planning Singapore-on-Thames to put pressure on them to do so?
Thanks for that, Hamish. I mean, I hope that we'll see progress on equivalence. Mairead McGuinness, the EU Commissioner, seemed very optimistic that there would be progress on the MOU, and hopefully that might unlock progress on the equivalence decisions. As I've said before, I think it depends on which version of Singapore-on-Thames you're talking about. If it is the slightly fantastical version of a low regulatory centre, then that definitely isn't the route that we should be going down. The route that I think we should be going down, and you could call this Singapore-on-Thames conceivably, but it was illustrated to me by the economic attaché at one of the UK embassies in the EU. And in fact, Ursula von der Leyen, ironically enough, then used a similar metaphor later, which is that if you think about the EU as an 18-ton truck careening down the highway, and it has scale, it has mass, but it's not maneuverable. Whereas what the UK ought to seek to be is an Aston Martin. It's never going to be the same scale, it's never going to have the same kind of mass, but it is fine-tuned, it's tailored, and it is able to be much quicker, much faster, much more maneuverable, and able to respond to opportunities and avoid risks much more quickly. And my view is that that's the route we should go down. We should maintain high standards, but we should have a regulatory approach that is designed for the UK and the UK's requirements and UK growth. And ultimately, the Europeans can build and will need to build a regulatory architecture and a regulatory approach that makes sense for 27 different member states, many of whom have very different levels of sophistication in financial services.
Thank you very much. Question from Oliver. Without judgment on the asset itself, when will the regulators get round to start leading on cryptocurrencies? Canada, Australia, Switzerland, etc., are pulling away from us.
So again, a great question, Oliver. Thank you very much for that. There is one of the many consultations that is underway at the moment is one looking at cryptocurrencies, and we've made a submission into that ourselves, alongside many other industry bodies. Clearly, one of the advantages that the UK could have outside the European Union is precisely what I was talking about earlier, that when it comes to crypto, that we strike this balance that I think has to be at the heart of the UK's future success in our industry, of being nimble, being maneuverable, being flexible and adaptive, but maintaining extremely high standards. And I think when it comes to crypto, we've seen, I think, some really interesting and some very promising innovations here in the UK. There's clearly a lot of interest from a Bank of England perspective. Obviously, we need to make sure that the risks are managed properly and appropriately, and that there is an appropriate regulatory and supervisory structure around this, but a regulatory and supervisory structure that is enabling rather than suffocating of innovation.
I've got a question from Nicola. Would exit from the EU allow the PRA to adapt the solvency regime to reduce capital strain on investing in long-dated liquid assets, or change the risk margin calculations?
So Nicola, thank you very much for that. The reason I have a wry smile is that I spent 7 years at Prudential dealing with the joys of Solvency II, and whilst I would bow to nobody in my admiration for the drafters of Solvency II, there were clearly areas where it was, back to, as I was saying earlier, not designed for the particular nature of the UK market. So as is alluded to in your question, one of the impacts of Solvency II was that it hit annuities, and it hit the ability of companies and insurance firms to provide annuities in a way that was most advantageous for customers at a time when Europe had and still does have a major aging population challenge and a retirement income challenge. You know, at one point, some of the proposals around Solvency II would have made it next to impossible to invest in green infrastructure. I mean, this is clearly not the direction that we need to be going in. So there's a review of Solvency II going on underway in the European Union. The regulatory authorities here in the UK are looking at Solvency II as well. And the hope is that you end up with something that is refined to take, as I said earlier, account of the fact that the insurance market here in the UK has to serve a population of 68 million in a way that is different to how it would have to serve a population of 500 million when the UK was part of the EU. So I do hope that the regulators will look at this. I know they're looking at this, that they'll look at it in an appropriately sensitive manner, recognizing that we need to maintain high standards, we need to maintain an appropriate approach on risk, but also that this is an opportunity to think creatively about how we can make sure that we have an insurance industry that is able to lean into and provide solutions for people.
Lovely, thank you, Miles. What percentage of workers do you think will be back in the office in the city in Canary Wharf in September 2021? That's a question from David.
So great question, David. I mean, at the moment, I'd say that it was running at around 10 to 15% of people being back in the office from what we'd managed to pick up before the latest lockdown kicked in. It's a really difficult question to answer in terms of giving you a hard and fast statistic, and whatever I give you will almost certainly be wrong. But if the vaccination program continues to roll out at its phenomenally impressive rate that we have in this country, if we can avoid a further lockdown, and if God forbid, we don't see a new mutation of the virus or a new strain of the virus that sends us all back into our homes, then my hope is that by around September, that probably the majority of people will be back in their offices, and I would have thought a clear majority. As I alluded to earlier, the question is going to be on what basis are they back in the office? And I think this also raises real questions about city centres, about public transport, about footfall, about commercial real estate and the returns that provides for investors. So I think there are many steps still to go. But again, I'm optimistic that certainly by September, the majority of people, a clear majority of people, will be back in the office.
So, thank you, Miles. A question from Francoise, who is saying that green finance may be appealing to some stakeholders. What is London doing in relation to promoting green finance?
So there's a huge amount that's going on in green finance in the UK and in London. So the City of London Corporation, for instance, has supported the creation of the Green Finance Institute that is looking at how we can take that forward. The Bank of England is looking at this in great depth. Obviously, this year we have COP26, and my expectation is that as we approach COP26 in November in Glasgow, that we will see a range of announcements. The Impact Investing Institute has been doing a huge amount of work on green gilt. Government is now taking forward and looking at very closely. We're looking at a range of proposals coming, I suspect, from companies and from organisations such as mine that set out what the industry can do to help challenge, to help deal with the climate challenge. But it's also worth looking at this as not just as something that is being done from a philanthropic perspective. You know, I was at HSBC when we put $100 million into green finance, and the point was always made: this isn't being done because of philanthropy. This is being done because it's the right thing to do economically. It's the right thing to do commercially, as well as being the right thing to do ethically. And the fact that all three of those are factors means that it's self-reinforcing. So I'm a big believer in harnessing markets for public goods, and I think that the green finance initiatives that we'll see and have seen in recent months are going to show real further progress. And I think there's a lot we can learn from other centres. Looking at taxonomy, looking at the use of regulators to ensure that if a bond or a fund is badged as green, that it genuinely is green. So I think there's a lot here for regulators, government and industry to cooperate on in the years ahead.
Lovely. I'm going to try and squeeze two more in. Quick answers, if you don't mind, please, Miles. William asks, Matthew Lynn wrote an article recently suggesting that since London and Amsterdam complement each other in financial services, they should become strategic partners. Would Miles care to comment?
Shall I take the second question? I can answer them both at the same time.
Okay, lovely stuff. Question from Brian: are you working on building and strengthening links with financial centres outside Europe? If so, which ones will be the most important for London's future?
Great, thank you to William and Brian for those. So we have an Anglo-Dutch financial services dialogue, which actually looks at a lot of these issues. And the interesting thing that emerges from that is that when you think about common challenges, things such as climate change, data, fintech, these are areas where there's a huge appetite for cooperation between the UK and Amsterdam. I suspect, as I said earlier, we'll need to see some of the dust settle post-Brexit. I'd also, I would just sort of caution slightly against reading too much into the shift of shares to Amsterdam. It's symbolically, you know, quite powerful, but actually in terms of what it means for the critical mass in London, not that significant. And on financial centres outside the UK, that's one of the major things that the TheCityUK does. We cooperate very closely with the individual trade associations, with government, with the City of London Corporation on this, as well as organisations like Scottish Financial Enterprise. In terms of the key markets, I'm bound to miss a few of them here, but I would point to the United States, which is clearly a key market for the UK. The Japanese market, clearly we've seen a huge amount there in terms of the free trade agreement. The Swiss market, where I think there are some really exciting proposals under consideration. We've also seen the Swiss mobility agreement. And if you think about the growth markets of the future, China clearly is making huge headway. American companies making a lot of progress there. We're hoping to see some further progress from British companies. India as well, huge potential over the long term in terms of growth and the appetite for cooperation with the UK.
Lovely, Miles. Thank you very much indeed. Apologies to all those who've kindly submitted questions that we haven't managed to get to, so I'm sorry about that. But really, Miles, thank you very much for being such a great interviewee, and thank you for sharing your thoughts. We're most grateful to you. Thanks very much indeed, Miles. And
thank you very much to you. Thanks to the IoD and thanks to Rathbones. Have a good evening.
Great news. Thanks, Miles. So look, everyone, thank you very much indeed for being with us here tonight. I just want to say a little bit about what we've got coming up for you for the IoD in coming days. As you see on the screen now, on the 31st of March, we've got some extraordinary event in relation to on micro-credentials and how we all have to adapt. And that's on the 31st of March at 6 o'clock. And then also big session in relation to LATAM opportunities on the 7th of April. Also coming up are a few of my interviews, one with on the 12th of April with Lord Karen Billamoria He's the founder of Cobra Beer and also the chairman of the CBI, a remarkable individual. And I think you'll enjoy that. And then on the 19th of April, I'm interviewing the Right Honourable Jeremy Hunt MP. So I look forward to that. A couple of other things I'd just like to talk about, and that is if you're not a member of the IoD, then really you should think about doing it now. There are extraordinary opportunities here. There is an incredible list of things that are part of the membership package. I'd like particularly to point you towards the professional development programs, which are extraordinary and increasing all the time. You get events like this as part of your membership, plus also legal and tax helplines, which can be incredibly cost efficient. So your membership from IoD really does go an awful long way, and particularly in these tough times. Just as we're about to come to the end of our session tonight, I'd like to thank Miles Celic for his very good sort of answers to the questions that you've posed. I'd like to thank Rathbones for their kind sponsorship of this event. We're very grateful to Rathbones for their continued sponsorship and support. I'd like to thank the production team, Jeremy and Kirsty, plus also Sophia and Manuela for their kind support. I'd like to thank the team at IoD City of London and for their encouragement for this. And most of all, I'd like to thank you, the audience, for joining and making this all possible. I've enjoyed it very much indeed. I hope you have as well. And I wish you a very good evening. Thank you very much indeed. Bye-bye, everyone.